That was just last week, our interview with Palantir CEO Alex Karp here at the New York Stock Exchange, when I asked him how big the company can ultimately get. You got a taste of that last night with earnings. Palantir now the best performing stock in the S&P 500 right now, hitting new record highs. The company reporting strong results and guidance fueled by what it calls untamed organic growth in demand for its AI products. That said, our next guest isn't convinced. Jefferies analyst Brent Thill joins us now. He's got an underperform rating on Palantir, did raise the price target to 60 from 28. Brent, why are you sticking with underperform on this name?
Kudos to Palantir on the fundamentals, Sarah, but in the last 20 years in software, there's no name that's ever sustained this multiple. It trades over 55 times revenue, even if growth accelerated. Again, this company's growing 30%. It's not like it's growing 50 to 100. They're growing 30. And if you think about other stories that's got to these multiples, they didn't sustain, and growth at some point faded. And when that happens, the multiple implodes. So ultimately, it's not necessarily a call on Palantir. I think our view is we run a balanced portfolio and we like other names. You can buy Meta at 25 times earnings, not revenue, earnings, and get an amazing return and play the AI theme through Meta. You can own Google at 12 times EBITDA. You can own Microsoft at 25 times earnings. So effectively, our client base is more valuation sensitive. I've gotten 3 emails from institutional investors on this name. It's owned by mainly retail and the insiders of Palantir. So yes, is there an opportunity for institutional investors to own this at some point? Is that the next catalyst for the stock? Maybe. But ultimately, I go back to right now, the names that our clients are owning are names where they can have support and valuation. So I'm not against owning some of these higher flyers. But again, I think it has to be a lower percentage of your portfolio because ultimately we've seen this movie before and it does not end well on multiples.
But shouldn't we talk about why it's such a high flyer and the fundamentals of the business, which, okay, you mentioned the 30% growth. My question on Palantir is anyone else doing what they're doing in terms of the AI services they're offering, primarily to the U.S. government, which are now they're scaling across enterprise? And you heard from Alex Karp what the demand looks like.
Yeah, I mean, look, they have a unique solution from the application to the infrastructure. It is no doubt a unique story. And in that sense, the question is, again, how broad is this? And again, there's a lot of vendors that have AI solutions and AI infrastructure. So there's other ways to play this AI theme. It's not just Palantir. You can't listen to him and say, oh, he's the only game in town. That's not true. There's a lot of other games in town. So if you look at AI infrastructure, right, you've got Amazon, Microsoft, Snowflake. There's a number of assets you can own. Yes, if you wanted to complete a Palantir-like solution, you'd effectively have to take multiple solutions and stitch them together. So we believe Dr. Karp on that view. So we're not challenging the fundamentals. What we're trying to do is separate the fundamentals from the valuation. And again, those are important to do. I've been burned so many times in the past by sticking with, hey, it can keep running on the multiple. Now the multiple today is 55 times next year's number on revenue, not earnings, not on EBITDA, on revenue.
Yeah, 55 years worth of revenues is rich, to say the least. Listen, Brent, I applaud your willingness to sort of call it out. That said, I mean, they are accelerating in terms of their growth rate, 64% now for the commercial business. Investors always like that. And I can go back to the mid to late 90s as well. Yahoo, wouldn't have wanted to own it at 50 times revenues. I think it traded there, maybe even more. But Amazon, I would have, because, a lot of people didn't necessarily recognize the full opportunity. So give me your sense there.
Yeah, I mean, look, we all do TAM analysis, but now that the market cap's over 200 billion, you look at a company like CrowdStrike, where half of their it's got less than half the market cap, is growing mid-20s to 30% and has good margins, and you don't have to pay. You can pay a fraction of the multiple. So I guess my point is, it's okay to own a piece of this, but my point is, we think there's higher conviction stories where I sleep at night not worrying about where the multiple is at. And ultimately, everyone's painting this big TAM picture. Look, if we did this across the rest of software and anyone in AI, we'd have multiples that are unsustainable for the industry. And so, again, I think we saw Snowflake get to 50 times revenue. We saw Datadog get to these multiples, and those multiples ultimately corrected. They went from 50 to less than 10. And so, again, I think that growth isn't going to slow in the short term. But again, I think investors are acting like this is a company that's growing 50% on the top line. They're growing 30, and they guided to 30. And maybe they can accelerate that growth this year. And so we're not disputing, again, the fundamentals. It's just the valuation is beyond anything we've seen. And it's basically 2 to 3 times more expensive than the next single expensive stock in software. So there's another cohort of companies like Samsara, Snowflake. You go through the list. There's a lot of great companies where investors can make good returns where you're not exposing yourself to that level of multiple. Right. And again, I go back to David, the institutional investor community, they're not involved. Yep. They're not. And effectively, no, this is a retail, this has been fueled by a lot of the retail side of the house. And you can hear this company doesn't really talk to investors. They don't go to conferences. They don't return emails from institutional investors, but they will sit and compliment the retail investor all day long. And so I go back to like our client base are institutional investors. I get it. And I get it. Charismatic CEO, memification to a certain extent, but it's working, Brent. We'll have to continue the conversation. I was wrong.
He also really doesn't like short sellers and has called them drug addicts, the other class of shareholders. Yeah. Well. All right, thank you, Brent.